So let's talk about investing. Come inside the Bloomberg, and it takes a look at the S&P earnings yield versus the 10-year yield. That spread is just under 2. Do we hit 3% on the 10-year? And what does that do to the equity market?
We could very well hit 3% on the 10-year in the next few months, in the next few weeks, quite frankly. What does that do? I think it creates a short-term re-rating for equities. And then, of course, we'll see if the fundamentals support equities recovering. But to me, what we're going to see is a process throughout 2018 of yields moving higher, causing a re-rating of equities that then either pause, lower, or they move higher because fundamentals look better, earnings are improving, et cetera.
So the question is then, how do you invest? Well, Ray Dalio was speaking at the Harvard Kennedy School, and here's what he had to say about where we are in the bubble cycle.
We're not even in a bubble stage yet. I think we're in a pre-bubble stage that could go into a bubble stage because of this thing, that then could be followed by a bust phase. And so that in that last phase of the cycle would be my guess. And I would say that the probability of a recession in prior to the next presidential election would be relatively high. What would I say? I don't know, 70% or something like that?
Larry Summers, kind of quiet in that exchange. That's a rarity.
So 70% chance of a recession by 2020?
I think that's probably fairly accurate, right? I mean, certainly what we've seen is that late-term fiscal stimulus extends out the cycle. But it doesn't mean that it extends out the cycle so far that we get past the next presidential election. And what we know about typical economic cycles is the longer the run, the longer the recession.
In one word, what's your pre-bubble cycle stock pick, sector pick?
Technology, absolutely, where the fundamentals are strong and valuations are relatively attractive, historically speaking.